Hello, I'm Tim Harding, Chief Marketing Officer for Alternative Design. At Alternative Design, we specialize in unique, safe money alternative products that you can use to get in front of more buying units, capture more assets, and increase your bottom line. Today, I would like to introduce you to the next generation of indexing and tell you how you can start adding powerful alternative products to your practice that will distinguish you from your competition and expand your practice. Indexing as a concept offers some distinct advantages. It can provide broad market exposure at a very nominal cost while avoiding management risk. But traditional indexing also has some disadvantages as well. The investor is subject to market movements without the ability to react to those movements. It lacks the ability to capitalize on unique opportunities when they arise, primarily because first-generation indexing has no strategy beyond broad market exposure. And it also fails to address the need for asset allocation. Whether you're linked to the S&P 500, the NASDAQ, the Russell 2000, or even a commodities index, each index represents only one solitary asset class. Traditional indexing is rather like Tom Sawyer and Huck Finn floating a raft down the Mississippi River. You're only going to go where the current takes you. Oh, and by the way, you never hear of someone taking a raft up the river, even when it might be advantageous to do so. The current only flows one way, and you're just along for the ride. It's a passive approach. By contrast, the next generation of indexing is dynamic, automatically adjusting to changing market conditions, applying proven market strategies like modern portfolio theory and momentum theory, applied over not one, but multiple asset classes to achieve superior returns. At Alternative Design, one of our flagship products is linked to a proprietary index called the Goldman Sachs Momentum Builder. It's a rules-based index applying advanced mathematics across 7 different distinct asset classes. Stocks in developed markets like the U.S. as represented by the S&P 500, but also exposure to developed markets in Asia and Europe. U.S. bonds, treasuries, investment-grade bonds, and high-yield bonds. The stocks and bonds of emerging nations, emerging markets, and alternative asset classes like energy infrastructure, real estate, and corporate loans, along with commodities, inflation-linked U.S. bonds, and cash equivalents. Because this index is rules-based, meaning there is no active management, its performance can be back-tested, and the results are dramatic. Over the last 10 years, the index has averaged in excess of 7%. Year-to-date in 2014, it's up 7.54%. But most significantly, note the returns in 2007, 2008, and 2009, when the stock market lost 50% of its value from its high point to its low point. You can see from these returns there's only one negative year in the past 10, 2008, but then it was only a negative 1.36 when the market was in serious trouble. And then it was back up again in 2009. That's the power of asset allocation. The Momentum Builder can offer diversification of asset classes, active allocation. It comes with a guaranteed minimum rate of return, is fully principal protected, and can even provide the added security of FDIC insurance. Now, to gain access to this and other products in our portfolio, you only need to complete this simple one-page confidentiality agreement found on this landing page. And, of course, you may contact me directly at 858-240-2059 or email me at Tim, that's Tim, .Harding, that's HARDING, at ADIS, USA.net, as in Alternative Design Insurance Services, USA.net. Thanks for watching.